Good morning, folks, and welcome back to Almus Market Mornings. I cannot help but draw parallels between the recent diplomatic tactics and gully cricket. There's always a kid in gully cricket who threatens to take away his bat and ruin the entire game if the rules of the game are not bent to his will. And of course, the kid who will bat and bowl first, somewhere breaking the unsaid rules of gully cricket. He also tends to invent his own rules in the middle and remove them as per his convenience. He will also claim that he won. He may call others sore losers, but is generally put in line when another kid with a bat shows up and then starts claiming joint control of the game. As a podcast host, I cannot really say who I'm talking about, but you're free to draw your own conclusions. Good morning, JK. There is a sudden shift in tone when it comes to US dealing with Iran. Do you think this is the beginning of the end of war?
Good morning, Swaraj. That's a very good analogy on what we are seeing in the geopolitical scenario right now, where a few players are actually calling the shots and holding the entire world to ransom. And that's what, either way, of course. So they can create panic, they can create euphoria. So now, at least the only difference is that if it gets to a point where it starts affecting those key players themselves, that is when we see some sort of retractment by those players. That's exactly what happened yesterday. We had shared about the threats, mutual threats between US and Iran about destroying the civilian facilities of power and desalination plants. Trump hinting at saying that there is a deadline of 48 hours uh, before which he expects the Hormuz Strait to be reopened and all that. But even the market was severely reacting to all that. You know, Currencies falling, yields rising, oil again testing 116, 117. Uh, as the US market opened, we had the statement from Trump in the social media to the effect that US was stopping attacks for a period of 5 days, and that talks were going on with Iran for an end to the war. Although such a dialogue was denied by Iranian authorities, markets reacted very strongly, pushing the USD INR also towards 90 to 84. That's more than a rupee drop. We had closed at 93, 98 in the domestic market and even traded 94 once there was a closing hours of the bank. So not just that, even the offshore Nifty traded more than 3% higher of a couple of hours after the announcement by Trump. Now, the reaction in dollar and stocks was just similar to that seen in other currencies and regions, reflecting the way markets had been positioned, not entirely dismissing the fact that US is moving towards cessation of war. Notwithstanding that Iran denied it, it's presumable that the US moves out of its involvement. The overall friction and attacks may continue but may be much contained and raises hopes of an eventual ceasefire talks. And more importantly, Trump's statement came ahead of the 48-hour deadline, which I mentioned. And so that's big. It was a relief rally in the markets, to hear that statement. And people immediately recall what happened on April 9th. On April 2nd, I think Trump announced reciprocal tariffs against most of the trading partners. And on April 9th, he put a 90-day holiday or a 90-day period for implementation of the reciprocal tariffs, and the markets which had fallen severely after his announcement of tariffs had recovered massively after that. And in fact, we had seen most of the markets hit new highs after that. So I'm not saying it's a similar thing could happen now, but at least it's a relief rally that the market is seeing. And also, it's notable that some official from Iran also said, yes, there are initiatives from regional countries to reduce tensions, and our response to all of them is clear. We are not a party to start this war, and all these requests should be referred to Washington. Yeah, no doubt, or Iran being under severe attack from US and Israel have have to posture themselves tough. That gives them the bargaining power when as and when the talks happen. There's also a report in Jerusalem Post that Iranian parliament speaker has been dealing in talks with the US between Pakistan and Egypt also. So we had you know, the relief market rally. Then, one more background to why US could have, initiated this is that, US bond market had reached a very uh, crucial level, and yields have been rising as we have indicated, earlier sharing also. US 2-year yield and the 10-year yield have all risen, and in the meantime, US uh, national debt has crossed the 39 trillion, and at the current rate of market, US would be paying close to 1.5 to 1.6 trillion as interest cost alone. It's Armageddon for US. Sometime it's going to hit them very hard. How they would manage, there is no plan at all to address this. So I think instead of addressing the looming crisis in the domestic economy, I think Trump had chosen the route to de-escalate and bring down the oil price. Oil is the main point of stress, because the moment these announcements came, oil fell from 116 in Brent to 96. Later on, it has recovered to around 100 levels, but then it's a big come down. And I think oil will be the target for any moves that will happen. So that's actually a relief for most of the markets, because that is where the point of stress is, and including Indian market. Indian rupee, as I've shared, has been underperforming quite a bit. Even during this war period, it has weakened more than 3%, and that's where, of course, even the Indian policymakers would be heaving a sigh of relief that the oil prices come down. But then questions do remain about the supply chain issue, because we have not seen any statements regarding easing of Hormuz Strait, difficulties, and ships passing through, and all that. Yes, we should expect some progress in the coming days if there is no, a U-turn by US or any such thing. I do not expect, because in their own interest, as I shared in the initial part of the sharing today, when it starts hitting the main the key player, that is when you see some positivity developing. So we have seen the dollar index also fall by more than 1% yesterday. Stocks have risen, given back some gains, but I think at least we are not looking at a dire future, at least for the time being. We do not know how things will move from here. There is, market expectations on a rate hike by the Fed in December has slipped from 25% to 15%. Of course, there is no expectation of any cut by the Fed for this year. So there is some big change from market expectation yesterday to today, but these are all very tentative. We have not seen any major announcement by the Israeli government. Although there is a news also which says that Vance from US spoke over phone with Netanyahu, the Israel leader, and discussed efforts to open negotiations with Iran. There is room for some optimism from extreme pessimism that we were dealing with by the end of the week. But hopefully this continues and we see some sort of progress, particularly towards the relief to oil supplies, as well as to the Gulf nations who have been suffering for no fault of theirs. Thank you.
Thank you, JK. And yeah, we are seeing a bit of optimism after Monday morning's extreme pessimist moves just before the US Open. Trump's statement seemed to have been targeted to calm the markets. And as JK rightly mentioned, US yields were reaching significant levels, and some would say this was somewhat of a taco move, similar to what had happened when tariffs were initially announced. So yeah, that's the kind of moves we are seeing. I think as of now, attacks, if I'm not wrong, has still gone from the Israeli side and Iran side, but it is getting more and more localized rather than being so widespread. Maybe that's how this entire thing will eventually possibly spin off. And that's something we will keep a track of. All of this, of course, a big boost for this sentiment. More than big boost, it's like a relief rally because there was extreme pessimism on Monday morning. Even rupee appreciated strongly on the offshore market. Even the Indian stock futures were almost 3% higher in the offshore trades. Um, essentially, for India, however, if oil prices come down, it will be a relief. And what we are seeing right now, even though oil prices are still above 100, yes, what we are seeing right now is sentiment-driven rally. That's
Swaraj, the rupee, of course, I don't expect it to sustain any major gains. In
Mm,
fact, it's already bounced above 93.20.
okay.
So, as we shared yesterday, it's not just the war. The Indian rupee has been underperforming for long, and
For long.
there
Yeah.
have been other negative factors also for the Indian economy. So it will take some time, and maybe for the time being, 92.50 to 93.80 is the range that I will put. And perhaps for a change, without RBI intervention, there could be some cap on the dollar rupee gains.
Absolutely, JK. And very rightly said, even before the war, we were having some sort of a stagnant exports, and we were lacking on the terms of flows. So those factors are still there. So appreciation might be a little limited, but as of now, we are seeing a sentiment-driven appreciation. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.